Very interesting, stock that we're tracking next. Of course, very well owned as well, Amber Enterprises. But what's happened is the company's arm, ILJIN, has entered into a joint venture with Nexxbase. Now, Nexxbase is the company that manufactures a very popular smart wearables brand called Noise. You must have seen, the Noise headphones, and a whole host of other smart wearables. And now Amber has entered into a joint venture with them. Jasbir Singh, who's the Chairman and Chief Executive Officer at Amber Enterprises, joins us now to talk more about that. Jasbir, thanks a lot for joining in. Appreciate your thoughts here. This is a very interesting JV because, it's with a brand that is growing by leaps and bounds, right? Noise over the last many years. Just wanted to understand for Amber, what does this mean? Is there any kind of investment that you will be making? And in this Wearables division, you have, of course, seen a good growth in the electronics division. You've seen a good growth over the last couple of years. How will this augment growth there?
Thank you. Good morning. Thank you for having me on the show. Yes, we are pretty excited for this joint venture with Noise. Noise, as you would know, is as per the latest IDC Q2 report, they are the world's third largest now and India's number one, having 27.6% market share. So we are going to develop local comprehensive integrated solutions in the wearable space in this JV. And the new JV will have a new plant set up, giving a local solution in the wearable space. And we expect a good kind of a growth in this complete at ILJIN level. So in ILJIN, I would like to tell you that we just started by acquiring this company in 2018, which was just purely assembling PCBAs for consumer durables. But now we have wearables as a vertical within that ILJIN Electronics, and then we've added telecom products. So we are adding, and it's a good EMS play which we are seeing in the electronics division of ours.
Okay. In fact, I've been a personal user of the Noise AirPods as well a couple of years ago, and I must say that the quality is at par with a lot of the global, the best of the best wearable companies there. And of course, the cost is, I think, 1/10 or so. So you're doing a good job so far. But tell me a little bit about the Wearables division now that this JV has come through. For you particularly, I think 15% of your business comes from the wearables markets. How much do you plan to grow it to over the next couple of years? And what would this mean in terms of the absolute revenues that you're looking to get currently, which is, I think, about 340, 400 crores?
Yeah, so last year we did about 1100 crore in ILJIN, and out of that about 300 odd crores was the wearable sector. But because of this JV, we expect the JV to bring in about close to 1,000 crore plus top line going next year. And then, of course, moving ahead, because Noise is gaining market share. And as you said, that quality products and a very good design team they have. Very interesting products are going to be launched, and we are very excited.
Okay, all right. 1,000 crores of revenues, which is currently at around 350 crores. Did we get that number correct?
That's right. Yeah, that's right.
So this is by FY25?
Yes, FY25. So that is what... So it is a proper import substitution story and assembly as well as manufacturing of components for the wearable part.
What would the margins be approximately in that vicinity of around 4.5%?
Yes, I think the industry moves around that margin, so we will be in line to the industry margins.
Okay, Mr. Singh, good morning, Prashant here.
Morning.
There is intense competition in this space, isn't there? Would you be able to hold on to these margins, or will there be a gentle downward slope over a period of time? Even as volumes are humongous and the market is humongous, will margins slope lower over a period?
No, I believe as we backward integrate into the components part and bring in the local value add here, I think margins are sustainable. And perhaps it could grow as well, because Noise is planning to bring some more interesting products. They're launching some new categories. So I believe, yes, for the time being, it is definitely sustainable.
And this 1,000 crores will continue to sort of grow at what kind of rate beyond FY25?
Well, I think Noise, looking at the history, they have been growing in double digit. in last couple of quarters. So we expect that they will continue to grow that way.
Okay. So currently, Noise has a large presence in wireless earbuds or smart watches, right? Neckband earphones, etc. You said that there are some new categories that they're looking to get into. Which ones are they, and what is the timeline in terms of a rollout as well? When would it start sort of contributing to ILJIN?
Well, that's little company-sensitive information. I like to avoid what kind of products they're going to launch. So, but yes, you will be hearing, every quarter they are planning to bring in some new categories.
Okay. So I just want to understand, because so you're saying the manufacturing will be from Noise and from Nexxbase itself, right?
Yeah. So it is a 50-50 JV. So
yes.
It will be set up in Noida, which we are planning to bring in. And in this setup, we'll start with the wearables and then move on to the other electronic products.
So would this mean any fresh capex that you would have to put from your end? If yes, what would the amount be?
It is not a very big capex. We have already invested because we've already started wearable sector last year itself. So over and above, top of that, I think we will be investing about 10 to 15 crores in next year for that.
Okay, that's a small amount then. So we've spoken enough about this JV. I want to understand business on the whole, Mr. Singh. In the last few years, you have undertaken big capex. And because of that, some of your return ratios have looked a little bit subdued. But now things will start improving as you start utilizing those facilities. So my question to you is, what is the utilization level? And in particular, what is the utilization levels of those new facilities that have come on stream? Because in the next few years, you're expecting the ROC to move towards high teens. Please give us further details.
You're right. Actually, we've done about 1,100 crore capex in the last 2 years. And that was primarily for greenfield facilities which we have put in. So those are right now, they have started operations, and we are at about 35 to 40% of utilization. As we move ahead in coming 2 years' time, we will move this capacity utilizations of the new facilities to at least 60-70%. And that's how we expect the return ratios to improve. So we've already jumped from 11 to 15% last year, and this year we expect at least 16 to 16.5%, and then moving towards 18-19 number in coming year to come.
So the ROC will be 19-20% by 2026?
That's right. Yeah, that's what we guided earlier also in the market, that in next 2 to 3 years' time, we should be in the range of 19 to 20%.
Mr. Singh, could you tell us how has been the season, this particular season? Q2, just some color. How's it gone?
Q2 is positive as compared to last year. Q1 was a dampener because of the unseasonal rains. But on the RAC side, RAC division side, Q2 is positive. And we've also won a couple of more contracts in our railway division, which is Sidwal, where we have onboarded new customers and new product categories of gangways and doors and pantry systems, along with the HVAC systems, which we're giving the railway subsystems.
How much is this mobility right now as a percentage of revenues, and how is it expected to grow?
So last year we did about 420 odd crores. This year we are expecting that it will grow at a 20 to 30%. And it will grow more at a range bound of 25 to 30% because we've added new product categories. So we are now getting deeply into the railway subsystem part. And apart from, we started as HVAC for railways, but then we graduated into metro space and defense application plus data center air conditioning. And then now we are entering into the other product category. So we want to be multi-product category supplier in the railway subsystem moving forward.
And you're doing all metros, sir?
Yeah, my metro air conditioning plus we have done technology transfer agreements with the Taiwanese company and a Canadian company for doors and gangways, and we have developed pantry systems. These are new product categories which we've added in that.
Sure.
And what is Sidwal's current order book? I think the last updated number we have is around 700 crores.
Yeah, it has gone a little up. It is now about 840 odd crores as we speak today.
Okay. Can you tell me for FY24, what is the kind of revenue that you're targeting? You're sitting on about 7,000 crores of revenues as of FY23. What is it? Is it 10%, 15% plus that you can eke out by the end of FY24 or better than that?
Difficult to project that way because it all depends on how the quarter four, especially the room AC division, is going to have. Well, last year we saw that there were seasonal rains, but yes, I mean we've guided that we will maintain about 25 to 30% on the bottom line improvement this year, irrespective of the revenue percentage.
So, okay, 25 to 30% on the bottom line growth by the end of FY24. Earlier, you had said the electronics division growth will be about 25 to 30% this year. You stick to that, or do you think it could be better?
It could be better now because we've joined on the JV, as well as we will be starting very soon, and we are adding some products in the telecom division in ILJIN. So we are excited. I think we can cross 30 to 35%.
Okay, 30-35%. I just have one last question because, you know, I mean, we started by talking about how there is a big opportunity here, right? If you just compare, I mean, noise earbuds, for example, are costing what, about 1,700 at the max to 2,000 rupees. If you look at Apple earpods, they're at 17,000. So there is a huge price differential that you're seeing with domestic manufacturers, right? Any more such JVs or tie-ups that you're looking to do to capitalize on perhaps this opportunity in the Indian market?
Yeah, we'll be looking forward because you see electronics division, which is ILJIN, is now becoming number 2.0 story for us. So we will be, as I explained, from air conditioners, inverter PCB board, we graduated into consumer durable, refrigerator, washing machine, microwave oven, PCBAs. Then we've entered into wearable and telecom sector. Plus, we are now opening up automobile EV sector in that division. So overall, this division is becoming a EMS play, electronic EMS play, where we expect to deliver very comprehensive solutions to the industry. I believe it's a very interesting space. If we speak about wearable space, in the world, there are about 4 million units of wearables sold, and out of that, around in the Indian industry is expected to be 130, out of which, you know, noise is the largest today, sitting on 27.6% market share. So pretty excited. I think this is a big opportunity, and moving forward, we should form more alliances to get into the backward integration of this component space.
Is this exclusive? With noise, the tie-up, is it exclusive?
Yes, I mean it is exclusive with noise, but this JV will be catering to other brands also moving forward, because we are giving a complete solution, and it's not going to be only domestic play. It is going to be a global play from mid to long term perspective also.
Okay. You know, we had the management of Dixon some time back, and I asked them, what is the way that you will be able to get into the Apple sort of ecosystem, the supply chain ecosystem? So I want to just ask you that. Any way you can crack that? Are you plans afoot? I mean, is it possible in the foreseeable future?
So everything is possible. You know, we started our history as a sheet metal fabrication, and you know where we have reached today. So I think what Indian companies need to do today is to start focusing on R&D and also go backward integrated level. So we are one company which is very focused on the backward integration. In air conditioners, we can give you 70% of bill of material and complete products. Similarly, we would like to attempt this strategy, and I think with that kind of a strategy, as once we backward integrate into the component ecosystem of the PCBAs, there can be opportunities moving forward.
You know, one big shift for Amber, which you've kind of told us over the last few times we've had you on, has been that from making ACs, you're now getting into components, because, I mean, OEMs are making their own, but that's also more profitable, you know, the components side of things. Is that strategy well on track? And if you can give us a quick update.
Yeah, so right now we are at 29.4% of Indian manufacturing footprint of room air conditioner space. And as a solutions from finished goods to components, so brands do change their strategies. They do calculate and make versus buy. So we mitigated that risk. Whenever this shift happens, we supply more components. And yes, you're right, components, some of the components have better margins. In the air conditioners, what happens is compressor is supplied generally by the brands, or we procure it, but that adds to the top line, which we are not producing on our own. So in the component space, like heat exchangers, sheet metal, inverter PCB boards, copper tubings, CFFs and all, That is better margins than the finished good. And also because of our scale and the geographical presence, today we have 27 plants in India in different geographies of India. So that brings more leverage on the purchase side as well as on the offerings to the customers.
Got it. Just last question, sir, from our side. Are you sort of going to get into laptops as well?
We are not looking towards the assembly of laptops. What we are looking towards is in the IT PLI part on the backward integration side, on the component side. So we are developing some plastic products. We are doing some sheet metal products in that category.
Okay, but you have a better understanding than most about how this works, even though you're not getting into that segment. You must have read reports recently that there has been meeting between the government, MeitY, and industry stakeholders, and there seems to be a substantial dilution in terms of what was proposed. So, the date when these restrictions of import of laptops, this apparently has been pushed out by a few more months. Instead of licenses, now they're talking about the process being made online. There is also perhaps a quota system from FY20. So, compared to what the market was expecting, that this is a block opportunity which will certainly come to Indian manufacturers, there seems to be a fair bit of dilution. Is that reading correct?
No, it's not a dilution. It's actually, you see the narrative. What government wants is complete import substitution. Government wants complete self-reliant India, in every sector to speak for. So there is a direction from government to.
No, that is correct. But compared to what we assumed earlier, with what we are hearing, does this seem marginally, at the margin, some dilution?
I don't think so, because the licensing system has already been onboarded. Brands can apply, customers can apply and take the license. Similarly, case was happening, and we can see the TV getting manufactured in the country today. 100% of largely it has completely imports have stopped in that category. So that shift we expect in this sector also.
All right, Mr. Singh, thank you very much. Great speaking with you, sir, as always. It's a pleasure hearing you and the plans at Amber. Thanks very much.